Just before coming on air, like the quietest session on Wall Street ever, so in a decade at least. Pretty quiet one on our market as well, it seems.
It was very quiet on the Australian share market, and it does look like the Northern Hemisphere, a lot of it on summer holidays. And we saw just $3.3 billion going through the Australian share market. In the end, we managed to hold on to our gains, up by 0.2%. But we did see some of those defensive sectors really shining and having its day in the sun today. We saw Telstra up by a massive 2.7%, no doubt helped along by the dividend, that is the upcoming dividend payment, with the stock going ex-dividend next Monday. But we also saw stocks like CSL, Cochlear and ResMed gaining 1.5% or greater in that healthcare space. So it was definitely a day where defensives outperformed. There was also an interesting movement in media stocks, the old versus the new, and huge divergence in terms of performance. The new media stocks, which seem to be attracting a lot of the advertising revenue or revenues such as CRZ WEB, doing extremely well. In fact, both of these stocks hit all-time record highs on the market today. But if you have a look at the old media stocks like 10 as well as Fairfax, these are stocks which are trading closer to their all-time record lows. So a lot of divergence in that media space. And of course, if we have a look at iron ore, very much in the spotlight with the benchmark iron ore prices hitting a 31-month low. So we did see Fortescue coming under pressure, down by about 1.8%. So low volumes on the market, but plenty happening in terms of sector performance, in terms of the defensives back in the spotlight, and of course earnings season.
Look, I was going to ask about car sales a little bit later, but you sort of brought it up there, Julia. Is that what we classify car sales at? Is it a new media stock? Is that how we look at it?
Well, this is a fast mover in this space. It was a first mover in this space, and if you have a look at some of the technological advancements it's made, it has its iPhone application. So rather than a lot of its customers choosing to go into car dealerships, it looks like a lot of shopping around is happening through the internet or through iPhone applications rather than going into those traditional dealerships. So its model has worked very well. In fact, if we have a look over the last 3 years, we've seen incredible growth coming out of this company. This is a company where we have a look at return on equity. Over the last 3 financial years, we've seen this number being over 50%, which means with the equity at its disposal, it's managed to make about 50% on shareholders' equity, or greater than 50%. So a very strong performance. It's hit a key milestone for its business. EBITDA, earnings before interest, tax, depreciation and amortization, for the first time above the $100 million mark. And not only is it paying a final dividend, which managed to impress this, also come out with a special dividend of 6 cents. So not surprising to see the stock doing extremely well, but it is a business which has adapted to the new business economy very well, where consumers are choosing to shop through the internet rather than through traditional means.
Look, there's such a vast array and diversity of the structures, and I suppose, and obviously you need to go through it and read the detail of each individual one. Do you expect to see more of them through the market? I mean, is the environment still right for them in terms of appetite?
I think so. You're seeing that right from the top, where we are seeing sovereign funds interested in investing in safe haven assets, and then right down to the retail investor, where we are seeing more of an emphasis on fixed interest type of investments. You're right in that hybrids can see equity characteristics as well, so it's not strictly a fixed income type of asset. So it does tend to have an added measure of risk from the underlying asset, which is the company. So you have to evaluate the risk metrics of the company issuing that debt as well. So it does tend to move in line with the stock as well, in line with some of the fixed interest characteristics. But there's a huge amount of demand for products like this, not only from the retail investor, but all the way up as well. And I guess it's just a reflection of some of the jitters that are still around because of Europe, because we haven't seen a solution coming through. The will doesn't seem to be there at the moment, and there's a view that perhaps the European Central Bank might move too late.
Look, obviously one of the big market focuses today was NAB's Q3 trading update. Julie, we saw in the end NAB shares closed down 1.4%. No big surprise, UK operations once again dragging, but goes to show, I suppose, growth out there, even domestically, pretty flat.
I think the surprise in this update was the lack of information in this update. Usually NAB in its quarterly update, we see the net interest margin being released. We haven't seen that this time round, and we were expecting to see it come in at about 2.17%. So on the headline number, the cash number, the market expectations were around about $1.5 billion. It came in at $1.4 billion, so slightly below expectations. Bad debts pretty much in line. We did see revenue coming under pressure, as you mentioned, James, with the UK operations behind that and UK funding costs as well, but no huge surprises there. But the market-related business obviously coming under pressure. So NAB, the first one out of the big banks to come out with its quarterly trading update. Tomorrow is going to be a big day where we see CBA coming out with its full-year update, and we're expecting to see a profit of about $7.1 billion there. And then, of course, on Friday we hear from ANZ with its quarterly update. So we did see NAB shares coming back a bit, down by 1.4%, but really not as much information as we're used to receiving in these quarterly updates.